Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In our today's session of trading with the Visual JForex, we will start anew with a new indicator for the development purpose. We will be working with the CCI, that is Commodity Channel Index, to see if we can develop a highly profitable with high probability of getting the trades right. We will be looking for the permutations and combinations which might help us in figure out the optimum entry and exit points for our trades with the help of commodity channel index. So that is the goal of these few sessions in which we will be first try to understand the advantages and disadvantages of the CCI. Once we are thoroughly through the concept of the CCI and its possible uses, we will move on to the possible combinations which can be utilized to create the signals for the trading purpose and cancel the noise that is false signal, because not all the time the indicator is going to work fine, not all the signals generated by it are going to be profitable. So we always have to look for the ways in which to minimize the noise and optimize the entry points. We are going to need the filtering mechanisms to weed out the possible losers to the extent possible. This is the chart of the Euro USD in which it has moved quite sharply on both the sides. Its range is around 100 points, 100 pips, but in that it has been moving quite sharply on both the sides. It lost almost 100 points in the span of just a couple of hours. Then it consolidated and gained these points of around 70 80 pips in just 2 hours. Then again, it didn't really go anywhere and gave up all those gains only to bounce back from around the same levels. So this is the kind of scenario in which there is a lack of trend. There is no clear-cut strong trend on either side. The range is fairly good. It's not that narrow. The range is quite good, I would say. The only thing is it is continuing to move in the same range of around 100 pips, and within that range we will have to find the opportunities to trade and profit. I think in circumstances like this, the scalping strategies are going to work better rather than the systems which are going to purely rely on trend. We will see how we can utilize the CCI to trade in this kind of environment. Let me plot the CCI indicator, the commodity channel index. Here we have it now at the bottom of the chart. The CCI is a unbounded indicator, that is, it doesn't really have the cap on the higher or on the lower price. Theoretically, it can rise or fall to any extent, but that's not how it's going to work in reality. Usually, you will see extreme values reaching towards 400, 500, 300, and from there on, after the contra move starts, we will again see it dropping towards 100. The range in between minus 100 to 100 is considered to be of subdued moves, and when it moves beyond those points on the higher side or on the lower side, that is indicative of the strong momentum. Usually, it will not be moving in extreme values unless there is strong move on either side. It will usually try to stay within the range of 100 to 500, and for the classical interpretation, above zero is considered bullish and below zero is considered bearish. But that's not so simple for us to figure out the trading opportunities, because if you go for the crossover kind of trading signals when if it drops below zero from above zero if you go for the sale trade in just couple of candle periods it might even bounce back and cross from below zero to above zero. Now if you were to adopt that system you will have to go for a buy trade after squaring off the prior trade, but in the eventuality, if it is part of the consolidation and the underlying instrument is not really going anywhere, we will have multitudes of these signals with a crossover from either side of zero happening quite frequently and wiping out your account. So that is why some filtering mechanism after understanding its advantages and disadvantages is going to be very crucial. And similarly, if you were to simply rely on the extreme values to generate contra-trend trades, thinking that the extreme overbought and oversold scenario has been reached and there is possibility of reversal from that high point. Sometimes it might work well, sometimes not so well. If you look at the chart here, because there has not been any strong trend on either side, we have CCI indicator reversing course after reaching these extreme values towards minus 300. Here it reached close to 300. Again, here this time around, it went close to minus 300 and bounced back above 300. But after those points were reached, again we saw the contra moves starting and the CCI values, output values also went to reverse from these extreme levels. When the drop was sharp a couple of days back, we had the CCI indicator reaching minus 466, almost close to 500. So I had explained to you that this kind of circumstances can also happen. Theoretically, there is no cap on the either side. So that is why it becomes very difficult for any trader to work with overbought and oversold scenarios using these indicators. But it's difficult but not impossible. We can always figure out the ways you can use it like the RSI, but it is also going to be working for you to find out the scalping as well as trending opportunities on both these technical formations. I think the CCI is going to prove quite helpful. Only thing is you will have to figure out the combination which is going to work well given the limitations this indicator presents. Now coming to the limitations, we will have to find the workarounds. Only in that scenario we will be able to trade with it profitably. The simple interpretation of it, as I explained to you in initial moments of the session, we can use these extreme values as the overbought and oversold condition. Then you will say that when to place the trade. And I feel whenever you have these extreme level reached on these PCI indicators output value, what you can do instead of initiating the trade straight away at those extreme levels, you might allow it to cool off to some extent after some time has passed and this indicator output starts to move in contrary way. I think that might be more opportune time to get involved for the trading opportunity. So one thing to trade is to initiate the trade when there is a drop of the CCI after having reached the extreme level below 100 for the bullish momentum if the underlying instrument has been trading bullishly and there was the extreme value of beyond 300 or close to 300 was reached, After some time, there is drop below the 100 price level that might be considered as an opportunity to go for contra trend trades. The scalping trades can be taken using this system. Same thing is going to apply for the buy trades. If you have seen the CCI output drop close to minus 300 or beyond below 300, and after a while, after consolidation, there is a reversal and the CCI output starts to rise above minus 100 from below minus 100. That can be construed as the sign of possible reversal from extreme oversold scenario. And in this kind of situation, we can indeed expect some retracement to happen if not a big move, not a trend changing move, some scalping kind of opportunity, and some profit can always be generated by these reversals. You can even say regression to the mean from these extremes. So that is one simple use this indicator can be applied for. You can design this algorithm by comparing the CCI output over a last couple of candle periods. Then you can also define the range. If you feel like you can put in place the other conditions like last hour's candle closing should be below the candle closing of the extreme candle period. That can also be done. So all these possibilities are there. All you have to do is figure out the combination which will help you in finding highly probable opportunities, and at the same time make sure that in the eventuality of you getting it wrong, you don't end up losing too much money. So all these can be done. Only thing is, you will have to work within the system's limitation and find the combination which is going to work well for you. Let me now go to the JForex platform, which is provided by the Dukascopy Bank SA. You can find this indicator amongst the oscillator. Even I am not sure. Let me find it. It's given amongst the momentum indicator. There are four input parameters which need to be defined. The default instrument. Any instrument of your choice can be utilized for the purpose of building the algorithm. Usually, I work with the EURUSD, but it's not mandatory. You can always change the default instrument if you are creating the algorithm for other forex pair, forex cross in the market. You can change it anytime. There you will find this option of making changes. Here you have this long list of instruments available and compatible for the algorithm development. You can always change it if you are working with, for example, USD JPY. You can change this default instrument to USD JPY from the Euro USD. The candle period can also be customized as per our requirement. You can go for any candle period of your choice from few seconds to few hours to few days to few weeks can be defined. Here you get all these options starting from 10 seconds to monthly. So depending on your time horizon, you get to choose these candle period and apply accordingly. The shift is the look back period, whether you want to use the current CCI output or if you want to use the CCI output generated couple of candle periods back, you can define that by the look back period. If you want the current data, then the loopback period should be 0. But if you want to go back in time, then you have to specify the number of candle periods you want to go back, and that time's data will be considered. This is especially useful when we have to carry out the comparison of the output of the indicator over different times over the span of time. You can carry out the comparison by assigning different lookback periods using this shift option. Then there is a calculation period. This is usually as per the developer of the indicator. This is the default value of 14 for the CCI. This is usually the value, but you can change it. But my suggestion is that usually we should let it remain at this default setup. But if you feel like, you can change it anytime. So that is always the possibility. And then we get the output value, which we can use to define the conditions for the execution of the trade. So that's it from my side for today's session. If you have any query or any addition to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. In the next session, we will be building this algorithm. We will complete the setup and see if our algorithm is profitable or not by running it on the historical data and looking at the kind of trades it's going to generate. So do come back. It will be an interesting session next time around. Thank you all for joining in. Have a fabulous time ahead.